This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of the show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Investor Connect is a 501c3 nonprofit dedicated to the education of investors and startups for fundraising. Please consider donating $100 to the program to help others in their investor and entrepreneur journey. You can find the donate button on the investorconnect.org website. Well, hello, this is Hall Martin with Investor Connect, today with Hernan, Haro, founder and general partner at MrPink VC. MrPink is an early stage VC fund that invests in founders located in Colombia, Peru, Chile, Argentina, and Uruguay. VC investment in Latin America will exceed $10 billion this year, more than 2x the levels of 2019 and more than 20x 2016. Mexico and Brazil take 3/4 of the total pie. MrPink is focused on Capuk, where there is a huge need for seed capital. Hernan, thank you for joining us.
Thank you, Hall, for having me.
Great. So tell us more about your background before investing in early stage companies.
Yeah, my background is really engineering as an entrepreneur. I started my career here in Argentina. I work in several startups. First in pure engineering, like positions, like coding, like hardcore coding, backend and front end, all those things. Then move over to product, and at some point, I decided I really wanted to get into the entrepreneurial scene. And back then in 2008, there were no venture capital funds in Latin America, which is hard to believe, but it's the reality. So I hacked my way into the Silicon Valley. We were just chatting with you about how like being in the Silicon Valley doesn't make sense now, but it did back then. So I moved to California. I got my MBA at UC Berkeley. I started my first startup there between my first and my second year. That didn't work, but it was fun and experience. And after graduation, and I joined as late co-founder to another California-based startup called Pulpo Media. I was the COO, and we grew substantially. We got acquired a few years later in mid-2014 by a public company called Entravision. And I stayed on board for a few more years, and I stepped down, and I ended up joining another US startup called Consumer Affairs, where I had the privilege of being the only member of the leadership team that was not American. So I was working from Argentina to this, my second US startup, and I ran growth and data analytics and finance at different times, and eventually decided that I wanted to try something different, and I didn't know exactly what. I stepped down. I took some time to process, and the lockdown hit, right? So this put us in early 2020, and my plan was to take like a sabbatical of some sort, right? And the lockdown hit really hard here, and I thought this is very convenient because no one is ever going to ask what were you doing in 2020. And so I took some time and did some deep thinking and realized that I really wanted to do a venture capital fund because I could have a much bigger impact by doing that than going back to raising capital myself to run my own company, right?
Great. So what excites you right now?
As you said in the intro, there are like billions of dollars flowing into the region. That's fantastic. But reality is that when you look at the sub-region in which I'm focusing, Capuk, Chile, Argentina, Colombia, Uruguay, the reality is that the access to capital is still a big struggle for founders that do not have like big names in their resumes, right? If you are not a graduate from Berkeley or Stanford, MIT, or you are not from the last class from Y Combinator, raising capital is still a big struggle, and that created lots of opportunities, right, for people like myself that understand how to really look for the traits that make a great entrepreneurship, right? Just before joining, I was having an online discussion with someone on LinkedIn. The reason why a lot of people go for these like pedigrees or signals, strong signals of quality, is because there is correlation. There's absolutely correlation between graduates from MIT and good or great co-founders, but that's not causality. if you are brave enough and you can really get to know the entrepreneurs and realize what are the traits that are going to make them successful, then you can avoid going after the proven or the safer bets, and you can capture much more value for your investors as a general partner in a fund like myself. I can return much better value for my LPs, right? And at the same time, I'm expanding the pie. I'm bringing new entrepreneurs and giving them the opportunity to really show themselves. So that's what makes me exciting right now, right? That's what keeps me up at night, how I can keep doing this at scale, right?
Great. So you see a lot of startups and investors in Latin America. What's your advice for people investing in startups there? What do you tell them to do before they write that check?
It's still challenging to raise capital here, right? So I would say that fundraising abilities is even more important in LATAM than what it is in the US, right? And some people can be coached into becoming like successful fundraisers. Others will have a much harder time, right? My fund is a proof of concept fund, only like $10 million. So I definitely need like bigger funds, like investing downstream. So you need to make sure that the team, the founder, the CEO in particular, has what it takes so he can keep fundraising like long after the Series A, right? Then keep in mind most of the countries in South America are very homogenic in some way. Like we're much more homogenic than if you look at Western Europe, for instance, like moving from Spain to Italy. It's a completely different game. If you move from Colombia to Peru or Argentina, it's not that different, but there are still some nuances. So in highly regulated industries like health tech, for instance, just to name one, you need to be careful and make sure that the solution that the startup founders are pushing to market can really be implemented in these other ecosystems.
Great. Then what's your advice for people running startups? What do you tell them to do before they go out to raise funding?
They need to get the story straight, right? And I'm a big fan of building credibility, right? And I actually use the model from Franz Frey. He talks about the ways in which companies and individuals can create credibility for themselves, right? It's a very basic, simple model in which she talks about authenticity, she talks about logic, and about empathy. So what I found is that some entrepreneurs, they approach venture capitalists as if they were just like, I don't know, like a machine, like just listening, and they walk into the meeting, they start pitching like 20 seconds after. And you need to create some rapport, you need to create some connection, because at the end of the day, this is all about like people, trusting people and investing in other people, like LPs investing in fund managers and fund managers investing in startups. So do not overestimate the importance of having like a solid story and being a good storytelling, right? I think some people, probably the first-time founders, may just assume that the deck is everything. And I actually, for instance, I don't use a deck for my own fundraising, and I don't like entrepreneurs using a deck when they try to fundraise for my fund.
Well, let's talk about the state of investing in Latin America. How do you see the industry evolving from here?
Like closer collaboration between Latin American funds and US funds is needed, right? We still have to see like more fund of funds deploying capital in early stage South American funds, and later stage working more like hip to hip, with the same way that that venture capital fund early and later stage work in the US. That needs to be more predominant right now here. I'm doing that with some of my LPs are US VCs, and I do have like monthly touch base calls with them, but that's not the norm. I would say the international investors are getting in a little late to the party, and they are leaving a lot of like money on the table, right? They need to start getting inside early, and they're not going to do that themselves without like a local partner that they can trust. I think that's what we will start seeing the next, like, let's say 2 to 5 years, like sequoias getting very early on, much sooner than what we're seeing right now, by co-investing with funds like mine, hopefully, right?
Great. And what do you think is the biggest change we'll see in, say, the next 12 to 24 months?
In the next 12 to 24 months in this region, it's interesting. What's happening right now, we're following the same trend that what we're seeing in the US, in the sense that we are living through the longest bull market in history, right? Public equities are at all-time highs. I think the Nasdaq tripled in the last 5 years, right? That a 3x return used to be in a decent return for a VC fund. An investor have been the one that hold through the last through the pandemic were able to get that return just by holding an ETF, right? So there's going to be much more pressure for venture capital now with the war in an inflationary economy across the globe, right? So the returns need to be higher in public equities, in private equity, and obviously in venture capital. So there is more pressure to do that. And what we are seeing right now, it's an ever-increasing valuation situation, which I think is very detrimental for the industry and the founders in the long run. And it's likely that there's going to be some form of correction in the next year or two, not only in Latin America, I think in the US as well. Valuations need to adjust down, because when you are seeing pre-seed valuations in the order of $20 million, right? 8 digits, pre-seed valuations. That means that most of the LPs are gonna not get their money back, right? Because if you do the math, you need a large percent of the portfolio company to end up being unicorns, and that's just not going to happen when you look at the percent of companies that made it through a unicorn status. We are talking about 0.1%, right? So these keep working as long as new venture capital funds keep pouring money at that high valuations, but that's just not sustainable in my opinion. So I think VCs and founders should be really careful and look to raise money and invest in companies at valuations that make sense to the actual economics of the companies. Otherwise, they put themselves at high risk.
Great. Well, let's talk about your investment thesis. What exactly is it, and what's your criteria for making an investment?
My main thesis is the South American thesis, right? It's more broader in a sector, from a sector standpoint, but highly focused on the region in which I invest. I think the valuations in Mexico and Brazil are much more inflated than what you see in these other countries in which I'm focusing on. If you take these 5 countries, Chile, Colombia, Argentina, Uruguay, and Peru all together, you find that you have a market size which is similar to Mexico or Brazil, and a GDP which is pretty much the same, right? It just takes a little bit more work. It's less obvious, but this market can be as homogenic as going as only Mexico or Brazil, right? So my bet is really going in these markets, look for these startups that with strong founding teams, valuations that actually make sense and are sustainable, so they can survive through the pullback that I think it's going to happen in the next couple of years, right? Become strong at the seed stage in this region, then expand to Mexico or Brazil, or just leapfrog to the States or Europe or somewhere else. It may not be very common knowledge for most American LPs, but there has been a lot of high-level exits from a company from Argentina and Chile, South America in general in the last couple of months. And it's not only about ag tech or food tech, which kind of makes sense when you think about Latin America. There have been, for instance, the acquisition of Auth0, an Argentinian information security company acquired for $6 billion, right? Or we have Notco, a food company creating like plant-based like foods out of Chile using artificial intelligence, and they are selling in everywhere in the US and Canada. So these are like really global plays that were born here in South America. And these guys that I know like firsthand, they struggle at the time to raise pre-seed and seed rounds. And that's just absurd. So that's what I'm trying, that's the gap that I'm trying to fill, like being like smart enough to walk this vision, get in early, and then help them expand and connect with these like bigger funds that can provide the capital needed to really take this global.
Great. And then if we talk about the challenges for the investor in the Latin American market, what would you say is the main challenge they face there?
I would say everyone is looking at the same, it's using the same heuristics, right? So they all end up like chasing the same like company. They are not looking broad enough. I think that's because a lot of these investors, or let's talk about the angels first. Most of the angels are just like people that made their wealth in other industries. They are not entrepreneurs in many cases, and they don't really know how to understand early stage investing. And many times what happened with the angels is that they think they can make the founders better, right? That they can change them. And reality is the founders are running the show. The founders are the ones that need to have the skills and the passion to really put in the hours and make this happen. And when you invest thinking that with a little piece of advice, you can really change the trajectory of the company, you're going to end up like disappointed. And I know a few like angels that deploy millions of dollars and end up with like no return, pretty much losing everything. Those people should be much better off by deploying the capital in the funding, which you can get much better diversification, right? And then family offices, they take the same situation from the angel, but to an extreme, because they want to have a control. A family office, a Latin American family office, will want to just invest, I don't know, like $500,000 and get like a fifth or a quarter of the company and one board seat, right? And be calling the shots. And that doesn't work. That eventually dries out all the passion and the energy from the founders, and they end up with a big stake in an empty shelter. It doesn't make sense. So knowing how to make educated bets on people that have the traits, even if they haven't proved themselves, because we don't have like the industry is very young, comparatively speaking. If you think about the US, even the Texas is the entrepreneurial scene. Like we are like lagging in that regard. So you can't use those easy like shortcuts or heuristics or correlation data points that this guy used to work with that guy or went to that school. You need to be able to look beyond that and create your own heuristic. Right. I hope that makes sense.
Yes, it's a challenge for many investors in these spaces. So you talk about several applications and sectors. If you had to pick one or two in Latin America that you think are good opportunities for investors to pursue, what would you call out?
EdTech is a fantastic opportunity right now, right? And we are seeing like a lot of success and scalability, because the education system in Latin America is keeping a lot of people outside, right? Sometimes like getting like a good like college education can be prohibited, and we are in a moment in which knowledge workers can really like work for a company based anywhere. Like remoteness is no longer an issue. I've been doing this. I've been working remotely for the last, I don't know, like almost like 15 years. And that was a little odd or unusual back then, but not anymore. And the shortage of like IT workers and data scientists and UX experts, it's just becoming worse, right? This started, I think, in the early 2000s, right, when And India was the first like, world region that really saw this coming and started investing a lot of money to educate their population. And with that, they were able to capture a lot of like jobs from the US and fulfill and help like fill that educational gap back then. In Latin America, the governments are not doing nearly enough as they should. And that's the opportunity for venture capitalists. And there are a lot of like companies providing training and getting these people like up to speed, like in 6 months to a year, so as to at least be able to take like entry-level positions for US companies, European companies. And that has a very profound like transformation effect in the region. And at the same time, it's solving a war or global shortage of skilled resources. So it's a win-win situation.
Great.
That's my favorite sector right now.
Sounds like a good one. So in the last few minutes that we have here, what else should we cover that we haven't?
I think that this is more, I know your audience is heavily leaned toward like Americans, right? Mm-hmm. So this may not be as much of a surprise or as relevant, but I still believe that this is my biggest mission right now, which is to educate the investors here in Latin America about the profound effect that investing in innovation and venture capital will have on the evolution of a region, right? If you take a look for a moment at the American like public equities, and I think it's like 60% of the wealth, right, of the market cap of companies come from VC-backed like companies. If you take a look at Latin America, it's like 2%, right? So there's going to be like a huge transfer of wealth from traditional companies, from the family offices and corporate to new entrepreneurs. And hopefully that wealth will remain, at least in part, in the hands of local investors that are willing to take educated risk and deploy capital in the new generation of companies in Latin America. Because as we all know, after these like 2 years and counting of pandemic, many things have changed. Many sectors are being reinvented from the ground up. And that's an opportunity for innovation. I think this is the best time for being in venture capital. Like if you look at the statistics of the funds that were launched in the year 2001, right, or 2008, those are the ones those are the best vintages, right, the ones with the best returns. I think the ones launched in 2020, 2021, 2022 are going to probably exceed the returns from those years. So very exciting times.
Great. So how best for listeners to get back in touch with you?
So you can just reach out to me over our website. It's MrPink.vc. We get back to every single inquiry unless you want to sell me, I don't know, like a Xerox machine, right? We really get back to all of them, in particular to the entrepreneurs. And to entrepreneurs, we get back in less than 48 hours. That's our, they have our word that we'll get back to every single one, and we'll try to help wherever we can. Other VCs or investors that want to get in touch, yeah, it may take a little longer, but we do get back to all reasonable emails that we receive.
Great. That's quite responsive. So thank you for joining us today. We'll include those in the show notes, your contact details, and hope to have you back for a follow-up soon.
Absolutely. Thanks for having me today.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Halty Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.